Welcome to The Subject Property, your home for commercial property news, analysis and discussion. I have here again today with me Nerida Conisbee. Thank you for joining me. And we're here to discuss the potential tax reform that's been discussed quite widely in the media. Nerida, hello.
Hi.
Obviously, there's two items being discussed. Probably the most imminent item on the agenda is capital gains tax. Mm-hmm. We can maybe touch on negative gearing a little bit later. But yeah, talk to me. What's potentially on the table in terms of changes to the capital gains tax discount?
So capital gains tax concessions means that if you make $500,000 on a property, so just say you bought it for $500,000, you make $500,000, you sell it for $1 million, your 50% of that $500,000 profit becomes part of your taxable income. So the proposal is to not allow the 50% reduction. The proposal at this point, as far as we understand, would be to have the full $500,000 go onto your taxable income. So it is obviously causing a lot of concern amongst people in the industry, primarily because a lot of property investors rely heavily on negative gearing and they rely heavily on capital gains tax concessions to make an investment in property viable. And if we do start to see these changes, it will lead to a reduction in the number of investors in the market. That will flow through to the number of rental properties. We know what's been happening to rents in Perth. They've been accelerating incredibly quickly. We do expect that to continue to happen, particularly if these incentives are reduced.
Yeah, absolutely. And one thing when I have these kind of conversations with people, and to put it simply, property markets always come down to a very simple equation of supply and demand, right? If supply is constrained in an environment of high demand, it makes it worse, not better. And I think so effectively making it less attractive for investors to own investment property. The concern that we have is that there'll be constrained supply, and they'll make the rental market much tighter and much more difficult.
Yeah, and absolutely. We can see this happening in Victoria at the moment. So the Victorian government has a lot of debt. To try and solve that debt issue, they have been putting a lot of taxes on investors. And now over the last 2 years, we've seen a sustained reduction in the number of rental properties. So the Victorian government does track the number of rental properties, and they have shown that there is a reduction. So the issue is that when we do have constrained supply of housing, you either get strong rental growth or you get strong price growth. It can shift between the two, but at this point, renters aren't really seen as that important. I think this is really the challenge, because we know renters tend to be younger, they tend to be lower income. We also know that people at retirement, if they are renting, they are more likely to go into poverty. So there does need to be consideration. The other point too, I think, needs to be made is that you need investors to supply rental properties. And I think this is often seems to be lost in the discussion, that they don't come out of nowhere. Someone has to be investing in rental properties for them to exist. And if we look at the role of government in supplying rental properties, they haven't supplied pretty much any for the last 20 years, so they're not going to really help. We are starting to see growth in build to rent, but it's tiny in terms of the level of development we're seeing. So even though we're seeing huge pipelines in places like Sydney and Melbourne coming through, they'll still only account for about 0.2% of total rental stock once they complete. So they're certainly not going to be big enough to be able to step in and really address a shortage once it does emerge.
So given, and I think for people in the property industry, it's really obvious to kind of see how, to join the dots on how these things are going to play out. What's been the government's pitch as to why they're doing it? Their pitch certainly is not going to be, we're trying to make this harder for renters here. what is it that they're saying they're trying to achieve?
Well, they're trying to. It's around affordability, and it is. We know affordability is a problem. If you have a look at, again, coming to a city like Perth, where 2020 you could have bought a home for $300,000 in a city, a town like a suburb like Baldivis. You've got homes selling for around $800,000, and it has when you have a thorough understanding of what's driving it, it's very much to do with the fact that Perth hasn't built a lot of homes for a very long time. Construction costs are extremely high. The WA economy has really bounced back over the past 5 years. It has led to a lot of jobs created, a lot of people moving into the state. So they're the drivers of what's happening here. But the investors are blamed, and they're unfairly blamed, but they are blamed. And so in terms of a tax policy, I think that capital gains tax changes are seen as an easy win because people at the moment are, blaming investors for affordability. It's also a fairly benign impact on the budget. So it won't actually raise a lot of money for the budget, but so that's a second factor. The other factor too, I think, is that they're probably just testing the waters to see how much they can do in terms of tax reform. And so starting small, and perhaps after, if there's not too much fuss around it, then they may move on to other things like negative gearing.
Right. Yeah, it's interesting that the pitch is around affordability and accessibility. I think for me, it doesn't make an awful lot of sense if you're an investor and the capital gains tax discount. That's an incentive for you to sell because it equates to more money in your pocket. If you're considering selling a property and all of a sudden you're going to get less money in your pocket, you're much more likely to hold on to that property and not sell it. And then of course that restricts supply even further than it is now, and to me it's quite obvious that it'll probably make the issue worse, not better. They're doing this 2 years, 2 years out from an election, but I think there's something like a good sort of 20% of the Australian population own at least one investment property. Is it something in that order?
It could be. I mean, we know that when the basic split is 30% of people own their property outright, 30% have a mortgage, and 30% of people rent. So, yes. 20%. I mean, it's possibly higher actually, based on that metric.
Yeah, that's right. And I think that also doesn't take into account, the aspirational investors. If you think about the average Australian that might be sitting on $70,000, $80,000, $90,000 a year, $100,000 a year, your super is certainly not going to sustain you in retirement. So, there'd be a lot of people that, that would be counting on having at least one investment property as a very key retirement strategy. So it'll be interesting because 20% plus your aspirationals. That's enough to swing an election.
Yeah, absolutely. And I think it goes. If you go back to 2019, the Labor government lost to Scott Morrison because of not totally because of what they were proposing with regards to negative gearing, but when you read the media, it does seem like everyone's against it. But then, and it seemed like that at the time when the election campaign was underway. But then, when people voted, it was quite different. So whether the mood's changed, I'm not sure. But it will be an interesting couple of years if they do make significant changes. I think too. Then another point to make would be around negative gearing is that we know that investors, when they first buy a rental property, that they do rely on negative gearing, and then over time, once rents increase enough, they don't need to rely on it so much. And so then if there are changes to that, it does lead to some consideration around the steady flow of rental properties coming into the market. So, I think one of the arguments some people will make is like, well, if there are these changes, renters will become first home buyers. But the reality is, like, some will, but a lot won't. And to even expect the number of renters to drop by a huge proportion is highly unlikely, because even in countries where it is much more favourable to buy, and New Zealand's a good example, we still see a very high proportion of renters, just because people, when they move out of home, they rent. People, when they divorce, they rent. Some people never earn enough money to be able to buy a property. They may not want to buy a property. They may want to rent. And so there's a lot of other factors besides affordability which lead to people.
I think when we talk about this, and I think it's important to, and I'll very, very briefly touch on, what negative gearing is. I think there's generally speaking a bit of a public misconception that there's some particular advantage here or something that's property specific or some negative gearing rule that gets applied. And the truth is really it's standard deduction income deduction philosophies. It's actually all within the Income Tax Assessment Act, which is the same act that gets applied to, say, for instance, a plumber that is deducting the cost of their tools from the income, or an employee that's deducting the cost of a laptop or training. So I think it's important for everyone to understand that. Can you see negative gearing reform being put on the table here?
I think it will be. I mean, it has been. Yes. We know that it already has been. It is being discussed. It isn't being discussed as intensely as capital gains tax changes. I think, though, too, we do have to recognise that in countries where there has been a drawback of mum and dad investors, and the US is a very good example, that someone has to step in. And in the US, it has been private equity that has stepped in, and you've had groups like Blackstone go around and buy up thousands and thousands of homes around the US. And when you look at the anger around or from renters in the US, it's not around mum and dad investors in the same way that it's here. It's around private equity and how they're creating imbalances in the market. The other issue too is that when you do see high levels of institutional ownership, it's not the case that suddenly rents get cheaper. That we know that if you do have institutional owners, they need to make a return, and they need to get, they need a higher yield than what a mum and dad investor would typically require. So
they need to service their shareholders.
They do need to service their shareholders. The other issue too is that they do tend to be longer term holders, so they're not transacting, and so that means that homes aren't then put on the market for first home buyers. And then I think what's really alarming is that obviously a first home buyer going up against a mum and dad investor is very challenging for a first home buyer, because the mum and dad investor has deeper pockets. If they're going up against Blackstone, they've got unlimited cash. Yes. So it's, yes. So then
very
again,
to compete against Blackstone.
It's very difficult. So again, this is what's playing out in the US. That potentially, that would have to be our alternative, because if we don't have mum and dad investors, the government can't step in. Someone has to step in, and it will be institutions that will step in to fill the void.
I guess by disempowering mum and dad investors, then you're really sort of playing into the hands of, for want of a better term, institutional and big business, I guess. Is that fair to say?
Yeah, it's fair. And it's not to say they don't have a role. And I think what's happening with build to rent, it's important. We know that mixing up the ownership structure of rental properties in Australia is appropriate. We can't always be relying on one form of capital, which we have been heavily reliant on. We have been heavily reliant on mum and dad investors. So by introducing an alternative form, it's important. But I think you don't want to completely displace it, because then we end up in a situation like the US where it's seen as an even more unbalanced equation between owners and people that are trying to get into the market.
And the widening wealth gap.
Yes, exactly. Well, they're very critical in the US, absolutely.
Yeah, that's right. Okay, well, thank you very much. You provided some good insights there, and hopefully we can have you back on the subject property.